Okay, it says I'm live. And good morning, America. I used to be a TV show. I'm not sure if it's still on. So here we are on Friday, OPEX Day. It's a big quarterly OPEX, triple witching. And on top of that, we have single name stocks, which adds another layer of complexity. We have big single name stocks expiring, Apple, Nvidia, all that stuff has got to be rolled if it's not rolled already. Over the overnight session, let me just pull this up here so I can see my notes. Okay. Over the weekend session, and now I'm going to turn my camera off so that I don't keep looking away from you guys, and I'll get the facing the camera and back and forth thing figured out eventually. Thank you everybody for being here, by the way. Anybody on X, say hi, retweet, all that good stuff. Okay, so quick recap of what happened. We'll talk for a second about the FOMC day, ancient history, if I can find it on my chart here. And that was the 18th. And just as a reminder, we opened up above 6,000 that day. And so we kind of stayed and drifted. Where are we? Over here. Where's the day that I'm looking for? Here it is, the 18th. Here we are. We opened over 6,000 that day, and we kind of drifted up to the 60-20 area, which we had positive gamma. We stalled out there. Then Powell started talking, and once we broke 6,000, we just got the reflexive hedging all the way down. Closed at 75, which was a feature we saw in the beginning of the day. Then in the overnight, VIX ramped up with ahead of a day off, a day of no market, with America maybe entering the conflict in the Middle East, all that sort of thing. But look at what happened. I mean, as they say, you can't make this up. So we closed wherever we closed on the overnight session on, here's Friday. Let me get my bearings. And then we just kind of ground down and down and down as headlines came out of the Middle East and all that stuff. And where do we end up, folks? 5910, 5900-ish. No coincidence. That's where the JP Morgan collar is. That's where a lot of open interest is. So that's where we kind of ended up. No shocker. Where did we end up coming to? 5975. And these are features that are on the map. The 5975 was on the map to begin with. We closed there for a reason to begin with. Right at this level. This is Mentor Qs. They got this roadmap thing. I guess makes it easy to see where the levels is. With triple whipping, I believe we'll be more or less flat all morning with downside positioning into the last hour. I agree with the downside positioning, and by more or less flat, if you say that means stay in the chop zone. Let me get rid of this so I can see the levels. Where's my stuff? And we're going to look at options depth in a minute, and I'm going to walk through what I see. So we have the 6,000, which is pulling us up now, and I'll talk about it in a minute, because market makers are short a ton of calls up there. So as we get up toward that area, they have to sell, but as we go back, they have to buy again to hedge that out. So a lot of this is being hedged out now, depending on different desks, risk parameters, and all that kind of stuff. But when we look at the options depth thing, you'll see this is going to be gone. And so then that puts us in an interesting situation with possible acceleration up toward 10, 15, with stalling up here, and we will see why in a minute. At the same time, 75 becomes an inflection point, and if we go below 75, stalling down near the 60 area, and you'll see why in a minute. And then should we break this, then we kind of start to head down here. Next time I'll see if I can get the colors a little brighter, easier for you guys to see. And from Sweden, the Monday after MOPEX is very short term. Let me see this. I most Monday I back tested this, probably 7 MOPEX was a short. After MOPEX, well, it's not quite as black and white as that. What is known is that after MOPEX, we tend to unclench. Now, a lot of that depends if VIX expiration was before the options expiration, the monthly, or after, because that has a different dynamic. It also depends on if VIX is pinned by calls, keeping VIX elevated, and by puts, keeping VIX down. So there's a few moving parts into the unclench that'll then spill over into the next week. So it's not quite as linear as after MOPEX, it's going to be X or Y. There's a few other ingredients that go into the equation. That's the quant part of quantuition. And the intuition part is having seen the way we've headed into OPEX, having seen the way the VIX is positioned, knowing where the big levels are, what one expects to happen. Okay, so let me get to the, let me remove that. Let me put this one on here. I like that comment. And let's talk about that. And what we're going to do to talk about that, we're going to start off here with options depth. Okay, so let's take a quick look at the AM. I don't want to spend a lot of time on the AM because that's going to be gone, so we're not going to get to trade it. Yeah, no, CK, fine. No problem. I'm happy to give my input. That's what I do. And it helps me think through things as well. Okay, so what's going on here? We got used market maker positive gamma here at 6,000. So what does that mean effectively? That means that if we're over 75, where we have this cluster of market maker short gamma, which is what we ended up getting attracted to, say yesterday in the overnight session, then as we go up, they sell, right? Because they're too short. But this is a massive amount. So as we go down, they have to buy. So that's kind of sucking us up toward this level. And we got this stuff over here, whatever. And now there's also positions behind. That's just looking at this in isolation, but look at how big this is. Okay, so that synthetic short at 6,000 is what's kind of keeping us in here, I think. So then, once this goes away, bye-bye. Oh, that's delta, excuse me, okay. Well, I was playing around with different things. Doesn't really matter. Right, the picture is different when we look at position number, when we look at gamma. And that's both of them. So let's look at the position number. Okay, that's why we didn't, the position number shows the path a little more clearly. I was looking at delta because I was calculating, trying to figure out the Vanna effect of of customer long dealers short below us, but market makers are long all this Vega from above, and how that plays with the delta. I was screwing around. So here's what happened overnight. Take two, the 70, and we kind of end up drifting over here, 95 and 6,000, which is the same story, just different size bars, where they sell as we go up and they buy as we go down. So let's get rid of this because this is going to be gone. And let's see what we're going to have to trade today. Now, if this were red and green bars, I would call the pattern what my old TA mentor would call a frog in a blender. Or Campbell's cream or frog soup. Red bar, green bar, Chop City. And so again, let's start with the if then at 70, 75, we'll say 70. If over 70, we have market makers short, magnet attraction up toward 95, stall at 6,000, round number, no shock. If over here, we have all this market maker short gamma here with this kind of inflection stopper at 6,000. So maybe a battle here. But remember, we have that 6,000 going away before the market opens. So we have some crazy dances here. If we can get over here, there's a path toward 2025. Right, we always top down FOMC day. A little too early for me to say that that's going to happen. I don't think we get much above here, 05, you know. That's what my gut tells me. And this is our main chop zone. So I think that we pretty much stay within this area, 70 or 65 to 6,095 most of the day, with some tests over here. It's in there 6,000, with some tests around the round number 75, maybe a little undercuts, you know, stuff in here, depending what VIX does. Maybe if the market gets nervous, maybe if the 10 o'clock numbers are lousy, we kind of tease 50. If they're great, we tease 20, 25, depending which zone we're in. But then we have later in the day the QYLD funds. And for those of you that don't follow me or haven't followed that, the QYLD is a family of funds. They're yield max funds, whatever they call themselves. They sell covered calls against the index. They don't really do it against the index. They have a special fancy 5-year long option, whatever, that costs them a couple $1 million or 50 million, whatever they call it, they sell against. But we don't have to worry about that. For our purposes, that doesn't matter. For our purposes, think of it as a QQQ or a SPY covered call. That's with a collar. Oh, not with the collars, that's a JPM, as a SPY covered call, a QQQ covered call. So what are they going to be doing? What they're going to be doing is at around 11, ramping up at 1 o'clock is where like it starts. They're going to be not showing my password. I see I'm getting smart in my old age. Let me log into my platform. Good morning. One thing I can promise you is you probably won't get an overly slick presentation from me. If you guys keep joining me in the morning, you're probably going to be getting this. Okay, this is some trades. Before I went live with my paid subscribers, we came on voice stream and we just kind of talked through the morning and we looked at some trade ideas, not investment advice, just kind of more teaching. How might I look at this? Or looking at different if-thens, what might happen, what would the trades be? NDX. Okay, so let's start with Q. What they're going to be doing today is they'll be selling around 5,000, 21, whatever it is, 21, where's the 50 delta? They'll be selling around, okay, it looks like somebody, you see this 398 open interest there, some people front ran it. They'll be selling these calls times 5,000. That's a lot of deltas in QQQ, which obviously spills over into the SPX. However, they also have XYLD, which is an SPX fund, which they don't buy back the calls on Friday, on the day before, for whatever reason. And let's just say they're probably going to be selling near 6,000, 59.75. We already have 4,000 parked there. And these, I think, are 8,000 contracts. So they'll be selling calls up here. They also have RYLD, which is the Russell. And for those of you that like to trade IWM, they're going to be selling calls up around here. And you see, it looks like some people already parked here. This is flyish looking. I'm not sure what the thinking might be. No, it's a cheap fly for a quarter. I might join the party. This is what you guys often hear me talk about for science. For 25 bucks, it's worth it for me to just see how this thing acts. A movie would cost me more. Okay, so we have all that selling coming in late in the day, consistent with what Kappa, Phi Beta Kappa, or Kappa the Greek. You have to tell us why Kappa, what the hidden meaning of your Kappa, what you're implying is. More or less flat, yeah, I agree with more or less. And I agree with weakness later in the day. Why? We have QYLD selling, the YLD fund selling. We have the unclench going into what's on the chain on Monday, and we're going to look at that in a minute. On top of that, we have event risk over the weekend. We have, let's take a look at what's going on in VIX. After that, I gotta go to my buddies Gamma Edge, who I keep threatening is going to be on. They'll be on. Paul Duncan. And so we have VIX. Here's kind of their secret sauce of a transition zone. And wherever it is, 20.5, according to the math. And so we're in this VIX gamma transition zone, whether it's perfect, whether it's not, doesn't really matter. And so as VIX goes up, it's going to get a little spiky. It's going to exaggerate things. And as we go down, it's going to cool things off a little bit. What do I want to say? What else do I want to say about that? Now let's remember that that's July. So it's not like it has the same impact it would have if it was a week ago, but it matters. If it was, like last week, a few days before, but it matters. So that's something we have in the back of our mind. Kappa ratio for risk-adjusted returns. Oh, risk-adjusted returns. I like that. So here we are. So that's what's going on in VIX. I also mentioned in my notes in the weeds, the VIX-VVIX ratio. We might as well get into that while we're at it real quick, as I'm kind of babbling. So here's the VIX-VVIX ratio. So it's a ratio of just simple arithmetic. Take the VVIX, the volatility of VIX, and divide it by VIX. And just like you can calculate VIX on SPX options, you can run the same calculation on VIX options, and you get VVIX. Put simply, when people are looking to hedge and buying VIX, the VVIX goes up over 100, whatever it is. Where's some of my volatility crap? And if we just look at where VVIX has been, when the world was falling apart with tariffs and all that, it went nuts. After May OPEX, it kind of cooled down, and over under 100 was where, depending how nervous we were locally or not. Then Wednesday, as we started getting the weekend headline risk and all that, we've been going up to 115, and now we're back down to 100. So you calculate this ratio, you divide VVIX by VIX, and you get a number. And 5-ish is pretty hedged, market's cautious, and 5.5-ish is average, and over 6 is they're getting kind of loosey-goosey. And so if we just look at this ratio with a time plot over here, guess you get a feel. That's that intuition, that quantuition here, mixing the quant with with the gut or with the experience. What do we see here? When we were making all-time highs, or whatever those local highs were in December, this ratio was over 7. That's extreme. Nobody's scared. Now remember, we had the December sell-off, and now we're down. Oh my God, everybody is freaking out. Then we had the January no fear. We had the February no fear. Then we had the March sell-off, the oh shit, pardon my French. where we broke below 5. And so just to give you some context for this ratio, and we're kind of at a normalish cautious point. I was looking at it over the weekend so that we have we, if you're listening to me, a frame of reference for what I expect going forward and when to get bullish, bearish, cautious, or less cautious. And that's one of those quantuition things. That's just one of those quantuition things. And that's basically it. Let me do something for a second here. Shameless plug time. How do I do this? So, as many of you know, I've been doing this online here for a long time. I've been doing this. Where's my God damn it, pocket here? I gotta go here. I've been doing this on Twitter for a long time. I'm on Discord and on Facebook. I've been all over the place. And okay, here we go. Let me get my Substack link in here. Let me get all my links in. Okay, let's get the affiliate links in. Mentor Q. They have a scanner coming up that's going to scan gamma levels. Options depth, which is what I use primarily for SPX. The Cadillac, as far as I'm concerned, and other people will say the same thing. Where the heck is my Substack? Here we go. Of course, my Substack, subscribe free, subscribe paid is even better. And what some of the paid people get, hold on, let me do this. Let me pull this up here. Sometimes I tweet this out afterwards. A cheat card, and I have two different cheat cards, one like this and one kind of a spreadsheet one. I have that kind of cheat card. And that kind of cheat card, easy reference, here's my daily plan on a card. Here's my daily plan on a card. But that caused guilt, options guilt. And of course you get, whoops, you don't get that. Of course you get my TV string, which is just, again, not rocket science. It's the same thing that is on my daily plan, the same thing that's on the cheat cards that I just asked ChatGPT to format in a string. And there's indicators out there. You can put the slot in. I have it. You know, if you subscribe, I'll give it to you, but it's free. I forget what it's called, Docs SPX string or something. And you just, where is it? You just put the input $SPX, whatever the label is, extreme, whatever the number is, and you format it. ChatGPT will tell you how to do it. That's how I learned how to do it. You could do it yourself. You could use mine, whatever. So we have that. We have my brother Binkus doing the scalping, micro scalping. iron condors is my thing. And let's talk about iron condors for a minute. And then we'll go. So what do I want to do for today? See, I don't like us being at this extreme level, but 6,000, what we kind of might expect. And then how scared are they going to be over the weekend? I don't know. So first off, the no-brainer level, quote unquote, is if I can get something down below 5,900. I don't think I can, but I've got some there at 50 cents just in case. On a pullback, if they give it to me, I'll take it. That's called my wish trade. Now, looking at what I'd like to do, let's go back to options depth. I want to talk about some of these trades. This is on there for July 3rd. This flyish looking thing, kind of funny, right? It looks like oh no, this is not for July 3rd. This is June 27th, the day before JP Morgan Collar Day. There's a fly on where they sold the JP Morgan Collar strike. Pretty big, 25,000 contracts. That's a lot of money even for me. But where do I want to sell puts? Well, I don't like this potential magnet here at 25 if we get sucked down. I don't think we will. The bottom of the expected move was 59.40. But so I'd like to be down here to be safe. I'd like to be above 50 if there's juice up there. And then I might do it differently, just kind of depending on how people like to trade. Okay, any questions, comments? So where's the pin? Let's go, folks. Come on, pin. Where do we close? Oh, and to do the pin, we have to look at charm. How negligent of me. Okay. So here's where the charm takes us in the AM expiry, but that's ancient history or going to be soon. So let's see what are some of the likely pins. Okay, we have the old boring 5,900 pin. We have another boring pin here, like we have a wide zone here, 75 to 50, maybe right in here if we have a little weakness. Then we have the below 50 pin, and then we have the bullish pin up here at 25, and we have the ultra bull up here. Kappa. Plus and off, so you're going, you're going in here. So 95, 90 in here, so that might be a fly to buy on weakness. Can maybe get the bull pin up here. Maybe if we manage to get right above here after we see how this plays out. 75 has been an interesting number. We closed last Friday at 75. We keep landing on 75. Oh yeah, of course, yeah. The charm profile will absolutely change past noon. Absolutely will change. If we're up here, I might buy a fly centering 75 or somewhere in here. And I might buy a downside fly. I'm not sure where I would center it. Maybe trying to capture something in here. And then maybe monetize it depending on how the day goes. I'll often buy 2 or 3 flies and trade some of them and then end up with where I decide I want to be. That's more for sport. That's really not something that's my main money maker. My main money maker is the iron condors or put credit spreads. They don't have to be iron condors. I'll typically have, I'll just make up a number. I might have 20 put spreads and 8 call spreads, or vice versa. I'm not looking to be delta neutral. I'm not looking for equal premium. I'm looking to be safe and get in and try to time my entries. That's what I'm looking for. That's me. So anyway, that's it. So that we got one pin going for up in here, going for right below the 30. And we're ramping up. And now, the market's funny. Maybe they're going to decide 2-week pause. Taco, Trump's going to chicken out, or Israel's going to go up and take it out with with like special forces. And so no event risk. Now we got 50-60 from YouTube. And given the XYLD selling and all that, I think that's a good lotto, especially if we open up here. Call the flat close, channel persisting, Wednesday, today, more of the same. So what are we calling it? Say 59, 60-ish, bottom of the channel, 59, whatever it is, 60, 10, 20, top of the channel. Basically the same channel we've been in for a week. So out of curiosity, I already have all kinds of crap over here. Oh, I don't have anything here yet. Good. So let me do another Frankenstein. Don't try this at home, folks. A little 10 wide for 40 cents. I'm going to put that in. If I lose 20 bucks and have to close it, or if I make 30 bucks, whatever. Like I said, this is part of my for science. This is part of my, it's well worth the 20 bucks. Please say on X, I would like to sub. Okay, sure. Be happy to. I'm going to do that right now. Don't go away, folks. We got business. Don't go away, folks. And it should be tagged in my profile, but I kind of suck at this stuff. So I don't like to be a pushy salesman. But since you asked, I'm going to put my Substack link up. And I'm going to say, what am I going to say? In case you are watching live and want to subscribe, link. You see, if you guys wonder how come I have all these typos, if I didn't have ChatGPT as my editor, nobody would be able to read anything. Link above. This actually came out pretty good if you ask me. Oh, you see this guy, Greg Capra? Master trader, worth of. He was my a mentor, him and Dan. Shout out, Greg. Only 10 people watching. My former TA mentors, OGs. It took me 3 years to convince him that there was anything with gamma, open interest, whatever. And so these guys are old school TA, whatever. I don't use that as my primary thing, but part of the they're actually really good. Part of the quantuition is the numbers. It's not just the quant numbers of the gamma and all that kind of stuff and charm. It's also where the moving averages are, where the support is, where the look left is, where the buyers and sellers showed up before, where the channels are, where the moving averages are. All that gets mushed in together. You found me through Vol 6. Okay. See that? Tweet that out, folks. You provide great value. I'm surprised your profile doesn't have more followers. I'm surprised too, but that's because I'm not much of a marketer. But hopefully through the magic of social media, whatever it is, I'll have more. But thank you for saying that. I appreciate that. Okay, on that positive note, on that positive, and he says he found me through Vol Sigs, and that's a particular compliment because Vol Signals is really very quant, very, for lack of a better word, sophisticated. There's, a lot of professionals in the business that subscribe there and that take his mentorship courses and his VIP stuff, myself included, to learn more. And to have people in that venue kind of hold me in some esteem, that's an honor. I appreciate that. Okay. With that, folks, have a safe trading day and channel your inner quantuition.